biggest reason is Philippines have a really attractive population structure.
So we've discussed the pros at length. Now let's talk about the cons.
Let's start from investment into the real estate in the Philippines.
All right, we're live. Good evening, everyone, and welcome to another episode of the GSR podcast. Today we're going to be covering the pros and cons of Philippine real estate with the Executive Director of GSR, Hitoshi Iemura-san. Iemura-san, would you like to give us a little bit of a background on your career so you can let the viewers know why your expertise is best for discussing this topic?
Hi, hello everyone. Thank you for having me tonight. My background, I started my career from the Japanese conglomerate, Tokyo Corporation, and I was in charge of the overseas property development project in Hawaii, Australia, US. I did career for about more than 10 years right after graduation of the Keio University. And after that, I changed my career to the management consulting. So I moved to the global consulting firm, to Accenture, and to make advice to several variety of Japanese and global companies to many variety of advices, M&A or launch a business in Japan and partnership arrangement like that. Then after that, I go to the investment fund, which is called Mitsubishi UFJ Capital. This is a part of the unit of the Mitsubishi UFJ Financial Group. The investment fund invest to the private equity, meaning that invest to the non-listed companies. Then we make them value up and to be IPO or to merge with other company, like that. Then actually I started my private business here in Philippines since 2009, which was in this timing the global financial crisis happened. We called a Lehman crash.
I see.
Yeah. So at the time, Japanese yen was really strong. Now Japanese yen is really weak. But at the time, Japanese yen was really strong. So I thought, okay, I should start investment outside of Japan. And firstly, I started to see Philippines. And at the time, I selected two destinations for my investment.
All right.
One is Philippines, and other one the US.
Okay.
Yeah, I started to invest. So at the time, I look around the opportunities in Philippines. Okay, actually, there are many good business and investment opportunity in Philippines, but let's start from investment into the real estate in the Philippines. That was 2009. After that, I always watching Philippine market, real estate, stocks, variety of things in Philippines.
That means you have more than 15 years of experience monitoring our economic. Yeah.
Oh yeah. Already long time.
Great. That should be more than enough for the audience to be sure of your abilities and how much you know our country. Thank you very much for your continued support, Iemura-san. All right. So let's start with the pros of Philippine real estate investment. You believe that we have a lot of long-term economic growth and infrastructure potential in this country. What's your basis on that, and why do you feel so confident in that in the Philippines?
Okay, first of all, whatever investment I do, I'm a guy and look at the macroeconomy. My investment strategy, global macroeconomy, global macro strategy, meaning that I don't need to only focus on Philippines. I look around the world, and I put my investment not only Philippines, of course, go to Japan, US, Europe, South Asian countries. Firstly, the important thing for me, look at the global economy and which is a good portion to put the money.
Okay.
This is my thinking way all the time. Global, we call global macro strategy. This is my style.
So you're looking at the biggest picture, so to
biggest
speak.
biggest picture and around the world. Then where is a good place to go?
That way you have diversified assets.
Yeah, of course. Yeah. Always, I think anyone, it is important for investor to make your own portfolio. Don't put all money into one things. This is a principle. So anyway, so I'm looking around and I'm analyzing data, blah blah blah. I feel Philippines is a strong and attractive destination for investment. Macroeconomy is strong. This is very important. Firstly, so I look at the Philippine economy, for example, GDP.
Okay.
GDP, I focus on GDP growth rather than GDP size.
Okay.
Size of the GDP in Philippines not big
Yeah.
as of the moment, not big, but important thing for me, how do they grow? Yeah, this is important. So I'm watching the GDP growth of Philippines. Actually, the Philippines is number 1 or number 2 in Southeast Asian country.
In terms of GDP.
Yeah, GDP growth. Yeah, not size growth.
Yeah.
Growth. Last 10 years, always Philippines or Vietnam taking a top position in terms of GDP growth. So that is the biggest reason for me to select Philippines. Yeah. And future, I think Philippines is going to have a pretty good growth for our not only near future but also long term.
How long term do you think? So?
I think a couple of decades.
Oh,
Yeah,
okay.
couple of decades.
That's very long
Yeah,
term.
the biggest reason is Philippines have a really attractive population structure.
Okay.
Yeah. We called it population dividend.
Okay.
Yeah. So, meaning that there are many young people, working people, and then they spend money, consumption. So consumption power is really big impact factor for economic growth.
I see. It makes sense given a lot of the young people are working and then a lot of them will be spending, so that makes the money circulate more in their economy.
That's right. Yeah. That is, Philippines is one of the we call it the longest population bonus terms in the
Longest.
world. Yeah.
Okay.
Philippines and India,
Oh.
long term, and
Alright.
both of the country people can speak English. This is also a big advantage to invite the investment.
True for foreign investors.
Oh yeah. This is a principal reason for me to choose Philippines.
Because of the population, because of possibly decades of good growth, and because of how consistent they are with their GDP growth.
Yeah. And another one point, especially this point is very important for real estate value, which is infrastructure. Railway, airport, bridge, skyway. Infrastructure is the base of the economic growth. At the same time, infrastructure make property value up significantly. For example, in the case of Japan, in Tokyo, we have railway systems. And most of the property near the station or in front of the station, always property value is really high. In Philippines, a new railway system going to be introduced.
True, the subways and the new lines.
Subway, Metro Manila subway, and Metro Manila commuter line.
Yeah.
Many planning in a BBM. little better more, 150 or something. There are many projects in this several railway project as well. So I think okay, in the future, once railway system installed in Philippines, there are many land which near station, in front of the station. Those property is kind of a promising property to go up.
Because their value is definitely going to go up, not just because of the railways, but because of the other infrastructure that is built around them as well. So stuff like malls, food establishments, condominiums.
So I have a big attention to the infrastructure planning and also implementations. How does it progress? Progress is going well. Yeah, I'm watching and how government spend properly to the infrastructure.
Would you say that these factors also give you confidence that more institutional investors will come in? Do you think that that's the reason why you can say that more foreigners will be interested as the decades pass?
Okay, yeah. Actually, the foreign investment is really important for not only real estate but also stocks and whatever. Yeah.
Just the general economy.
General economy. So we call foreign direct investment FDI. FDI is very, very important. All countries, not only for Philippines but also any countries. So meaning that all countries making a competition how to get the money from offshore outside. This is a really severe competition.
Because everyone's trying to pull everyone else into their country. Okay.
FDI competition. So foreign investment very important. In the case of real estate, actually the many individual person, Japanese, Chinese, American, buying for example condominium units here.
Yeah.
This is have a certain level of impact, but institutional investors' money is much bigger, much bigger than individual person's money. So I'm always have attention how institutional money coming in and coming out. Yeah. So in terms of real estate. It is not easy for real estate sector to get institutional money. Most of the institutional money going to stock market.
Okay.
Yeah.
Because
the reason is stock market is much high liquidity. Liquidity.
Yeah. That means it's easier to buy and sell.
Easy to buy and sell, right? Yeah. So institutional investor like liquidity basically. So in that case, okay, real estate, okay, we can easily buy it, but how to sell? It takes 3 months, 6 months, it doesn't work, right? So, but important thing in the Philippines real estate sector, there are many good REIT, real estate investment trust. Yeah.
Okay.
Real estate investment trust, maybe the audience know or not, but real estate REIT, we call it REIT. REIT is listed in the stock market.
Okay.
Ayala REIT, Mega World REIT. There are many, I think more than 10 REITs listed in the Philippine stock. Biggest one is Ayala REIT. So this is in this fund. There are, I'm not quite sure, maybe 30-40 properties. Primary office building, shopping mall, primary property. Put it in the
REIT, the REIT.
Yeah, REIT, investment fund. So then easy to buy and sell.
The stocks?
Stock market.
Oh, okay.
Yeah, through stock market. That's why actually the pretty big amount of money of institutional investor already come into Philippine real estate sector through REIT.
So to clarify, if an institutional investor invests in a REIT, does that mean they gain ownership of the properties under the REIT?
Oh, yeah.
So it's like they're buying property, but they're buying property by buying stocks. I see. Okay.
REIT is, there are many shareholders in a REIT, so meaning that this is kind of joint ownership.
But there's it's still an ownership to a degree.
Oh yeah,
right?
yeah.
Okay.
Yeah.
I see.
Very different to
Individual
have
ownership.
individual asset, but the value is the same. Value is the same. Yeah, REIT or individual asset value is the same. Maybe value, the value of the value in the REIT is higher because they have more liquidity. This is definitely a benefit for the institutional investors. So I evaluate the Philippine real estate because they have a good REIT.
Which means more investors are attracted to investing in those REITs. Rather, and that in turn makes the real estate market of the Philippines rise in value. Okay.
So,
I see.
So any price has been decided by demand and supply, right? So institutional money, big. This is demand.
Yeah.
Big demand coming to the value. Any asset value is going up. So this is institutional money is coming into Philippine real estate is one of the big attractiveness for me.
Yeah, that makes a lot of sense. You also mentioned at another point in time that another big reason you're attracted to the economy of the Philippines is our large amount of OFWs. Could you elaborate on that?
OFW is have a big portion of Philippine economy. I think around 10%. 10% of GDP come from OFW remittance money.
When they send money back to the Philippines.
This is like export, service export, right?
Yes.
That's service. Philippines strong export item is OFW. They earn. I think 10 trillion peso.
That's quite a lot of money.
Quite very big. 10% of GDP, and of course they limit the money to family.
Yes,
Yeah,
which
this is
makes
family. Filipino have a really strong family bonding relationship.
That's
So
true.
they spend limit the money to Philippine. Then what? How do they spend money?
True.
That is the point.
Yeah.
This there is not what I say statistics. So I just heard from the person in the industry. It depends on the year and it depends on the foreign exchange rate. But definitely the biggest spending for OFW money to real estate.
Because they want to buy homes for their
they
families.
want to buy their own house. They want to buy their house for parents. They want to buy houses for kids.
Yeah.
So this is so depends on the year, but the some year 50% of the OFW remittance money go to real estate market.
That's a massive amount of that 10 trillion pesos. 50% just for the real estate.
Real estate itself, the price is much bigger than daily products. So,
True, it is.
The portion is really big. So this is also the demand. Institutional investors' money is demand. OFW money also demand. So demand is getting bigger. The asset value
Is getting
higher. This is a simple theory.
And I guess that's also why a lot of developers are scrambling to meet that demand in that case. By making new condos that they can pre-sell or that they can develop.
That's why major developer salesperson go around the world all the time, road the show. They go to London, they go to LA, they go to Tokyo. They walk around Dubai because there are OFW over there. That's right. That's true.
No, it's great.
they of course they sell Japanese, they sell product to Americans, but major reason for developers go around the world to see OFW.
Oh, that's so cool to think about. A lot of countries have begun to acknowledge that Filipinos are practically everywhere around the world. Like no matter where you go, you will find a Filipino most likely.
That is a really unique factor in Philippines. This is the Philippines' unique strengths. Yeah.
Yeah.
So and also the important thing I think this is important because this money is not what I say speculated money. This is more real.
Okay.
This is not this. Sometimes they buy house for investment, but mostly they buy house for
end
to
use.
live. This is a real demand, not just buy and sell. So this is very important. Real demand,
which guarantees that the properties are going to be used for long periods of time.
Sometimes market is become bubble. Too much demand and price going up, but demand go out, then the price crashed. This is bubble crash. Bubble crash is always happen in the world, always. So, but Philippine real estate elevation of the real estate. I think this is not the bubble. This is a value based on the real demand.
Okay.
That is the important point.
So it's safe growth.
Safe growth.
Okay.
Safe and stable.
Okay.
Safe and stable.
All right. A lot of people like referring to real estate's growth these days as a real estate bubble, but hearing from you that it's actually within normal parameters in terms of growth is good.
Another reason why OFW money is real demand. So this is not buy and sell and go away from Philippines and go to somewhere else. They keep the money keep in Philippines basically. And another factor I like for Philippine real estate, stable growth, because there is falling capital restrictions.
Okay.
Yeah, we call negative list. Philippine government issue a negative list. Yeah, what negative list is a foreign capital restriction.
Okay.
They have a many list. Okay, you can buy. A foreigner can buy on up to 40%, up to 60%, sometimes 0%.
Okay.
Foreigner cannot buy. There is a list, a negative list. Philippine government issued. In the land is listed in the negative list. Yeah.
Okay.
So foreigner can only 40% of the land. 40% of the ownership of the land.
Okay.
And another rule is condominium title.
Okay.
Condominium title law in Philippines. This is based on the land ownership restriction of foreigners. So developer develops a big condominium, 1,000 units, for example. They can sell only 400 units to foreigners.
And the rest have to be Filipino owned.
Less 60% must be sold to Filipinos. This is real demand. Real demand, right? But 40% foreign money, sometimes speculation. Yeah.
Because they might buy for investment.
Or buy for investment. Yeah. But only 40%. So meaning that sometimes if there is no capital restriction, foreign capital restriction, some speculation money coming from offshore, outside of country, and buy, and prices go up. This is bubble, right? Bubble.
Oh, okay. But that's why the Philippines has this extensive negative list to stabilize the growth and prevent bubble crashes.
Yes. In theoretically, I think Philippine real estate couldn't have a bubble.
Okay.
Yeah, that is important for foreign investors as well. Stable growth is very important. Not we don't like up and down. Yeah, big fluctuation is not good. But I think Philippine real estate value based on the OFW money and foreign capital restrictions. So I think Philippine real estate is pretty stable and safety. Yeah, investment target.
So to summarize all of your pro points, that would mean that the Philippines is low risk when it comes to developing a real estate bubble. Its growth is stable, not only in the real estate market, but also for its competitive GDP increases. We're consistently top 1 and 2 in the world. OFWs are a massive factor because they're one of the unique things about our country, given we're practically everywhere. And because the Philippines takes so much care into its negative list, this way the money isn't speculative. It's more predetermined. It stays within the country and is actually properly circulated in its economy. Did I get all that right?
Oh, yeah.
Great. Awesome. Thanks. Okay. So we've discussed the pros at length. Now let's talk about the cons. You've been monitoring real estate for around 15 years. How frequently have you seen developers not complete the construction of certain projects?
Oh, actually, I don't know much about that kind of project. Sometimes I saw, I don't know the developer, but I saw the building just stop before compression.
Yeah.
Even if the center of Makati. Yeah, I saw one is in near Century City. They are stopped construction for a long time. Yeah, that is something trouble happened, financial or law, legal, whatever. I don't know whatever problem happened, and construction stopped and stuck. Yeah, but actually, I know many developers in Philippines. I know most of the major developers, and I always talk with someone in developers, and they introduce me a project. Actually, through actual contact with developer, I have never seen
That's
project
comforting.
stopped
Okay.
and stuck. Yeah, because I just basically I have a contact with a big developer. Yeah, I had a Megaworld, Century probably. I haven't seen actually project is stuck. Maybe, but there is definitely there is. Yeah, so we should maybe the buyer and the investor should be careful to buy a small that property from the small and mid
Developers.
small and medium size enterprise.
That makes sense because they haven't quite developed or given enough trust yet, and there's a higher risk of construction shenanigans happening.
So I always say to our Japanese investor when I do the seminar, the biggest risk of investment in Philippines is not complete the building compression. This is the biggest because this is in relation to the system of Philippine real estate payment. This we call pre-sale.
Yeah, pre-selling.
Pre-selling is a popular way for developer to
True,
sell.
it is. Yeah.
And most of the foreign people also use pre-sale. Yeah. Pre-sale have a two phases, good phase and bad, good point and bad point.
Okay.
Yeah. Basically, pre-sale is a good system because the buyer can manage their cash flow in a long term, 3 to 5 years. Yeah, through installment.
Yeah.
This is good. But on the other hand, the risk buyer start to pay money during the construction period. So if something happened and construction stopped,
Then
what's happened for your money already paid? This is the biggest risk. Right? So we should, of course, everybody must be careful to do this. But this is this is really hard for buyer to control.
True, because it's all up to the developer.
We should check the capability and ability of developer. Financial, or which we should check financial situation and their track record, like that.
All right. That makes a lot of sense. Okay, Iyamura-san, before we continue, why don't we take a short break to just rehydrate and also give the viewers a bit of a breather as well.
Okay.
All right.
Okay.
Thanks so much for tuning in so far, guys, and we'll be back after this short break. See you in a bit. For all of your property needs, come to Global Strategy Real Estate, GSR. We at GSR are your one-stop shop for anything related to your property and more. From management to buying, selling, documentation, and maintenance, we have your back. At GSR, we aspire to provide the level of quality and service which put Japan on the map as one of the hallmarks of hospitality. Let us manage your property today. And we're back. Thank you again so much, everyone, for tuning into the GSR podcast. I'm your host, Jose Angelo Zulueta, and once again, this is Hitoshi Iyamura-san. So we're going to go back to where we left off regarding the cons of Philippine real estate. And so far, we've covered the biggest con, which is construction possibly not completing, as well as what you can do to avoid that con, which is mainly being careful with small to medium-sized developers for the meantime, as they haven't quite developed a base of trust or a reputation to be able to fully guarantee the completion of construction. So aside from risking yourself with small to medium developers, what else do you believe is a large con that is present in Philippine real estate?
Actually, the biggest cons is building stop, construction stop. Other one is not really big factor, but for real estate investment, in the case of Japan, there are many real estate investors in Japan. They usually use the leverage. Leverage means get the good bank finance to invest real estate. This is a way of investment into real estate in Japan. So our Japanese clients always ask, okay, what kind of leveraging method in Philippines? Unfortunately, I'm always say there is leveraging method, but there is not good leveraging method. Meaning that firstly, interest rate is pretty high comparing with Japan. In Philippines, maybe 6-7% or more. Interest rate is too high. This is one reason, and another reason I think there are not many Philippine banks doesn't have a product to finance to the offshore investors.
It's more geared for local than
they have a
good leverage plans for locals.
Product to local people to buy, but not for offshore foreign investors. So finally, they don't use finance. They buy cash or they use installment prepayment, pre-sale. So leveraging is not prepared in Philippines. This is one of the cons. And ownership registration. It takes a time in Philippines. Sometimes more than 1 year.
I didn't know it took that long.
Yes,
I assumed a few months.
I'm not quite sure recently, but for me, it takes more than 1 year to have a title, certificate of title. So it takes a long time. That is
definitely a massive
confusing and annoying.
I would have thought it would only take 3 to 6 months at most. I can't believe it would take foreigners more than a year to get their certificates of title.
There are. Maybe I hope this procedure getting shorter now.
Yeah.
But in my experience and our clients' experience, there are many cases take a title for more than 1 year. Sometimes couple of years. Yeah.
A couple?
Yeah.
That is a very big deterrent. Oh my god. Okay. Do you think those are all of the biggest cons, or is there more?
Of course, the asset value in a long-term point of view, I believe Philippine real estate value.
Yeah.
Of course, depends on the location, depends on the developer, but standard one going up.
Yeah.
But of course, up and down.
Yeah, it fluctuates.
Fluctuated. Especially now, still, Philippine real estate market have a negative influence impact from the corona. Yeah. So I think the market value of real estate, many real estate price go down because demand is not big as of the moment. Because of the corona effect. And also maybe there are pretty big impact from the POGO ban by the
the recent POGO ban.
Because many Chinese people buy or rent a property in a CBD area. So this is demand. This big demand now gone.
Yeah.
So I'm just talking about purely the market point of view. I don't blame POGO ban. I'm just talking about the market demand and supply structure. So now big demand gone because of the POGO ban. So rent price is going down. Rent price going down meaning that the property value is going down. Property value is decided by the income. Income, right? Yeah, income down. Income going down meaning the property value also going down. So as of the moment, the Philippine market situation is not strong, a little bit weak because of POGO ban and still remaining the corona effect like that. But this is basically short-term issues.
Okay.
And I think in long term, the property value are recovering.
That's good to hear that this is just a short-term problem that needs to be dealt
market
with.
Demand and supply unbalance happen as of the moment.
I guess
because that's why I don't have a big concern about it.
All right. How do you feel about the current lack of marketing data, or the difficulty of accessing marketing data, like sales statistics and other metrics like that? Because my significant other is a broker, and it's been apparently a big problem compared to, let's say, the US real estate market, where that data is readily available.
Yeah, data. You too. I'm regularly watching the real estate report from John Langwasao or Li Chu. Those kind of research firm report. They are making a report every quarter or something.
All right.
Yeah. But we know the really big macro data. I could get the macro data from those quarter report. But real estate is really regional. Okay, this area, what's happening in this area? What's happening in Century City? What's happening in
Makati?
In the Makati?
Ortigas, CBD.
More small. Yeah, even in Makati, Legazpi area, and near Greenbelt.
Even smaller.
Yeah, it's real estate business is really pinpoint local. So we want to know that more micro data, but it is really hard.
It isn't there.
It is really hard, and it is not possible. So in that case, we need to hear from professional brokers, not only one, several professional person, and gather information. They know the price, right? Yeah, there is not the price in the statistics report, but
True.
the broker.
Yeah, the brokers know.
Broker knows the price, so we need to hear. We need to do hearing to recognize the market value.
That's a really big point.
Yeah.
All right. Thank you again so much, Iemura-san. So let's see if I can summarize the cons and let me know if this is accurate. Once again, the biggest problem with, or the biggest risk you could have with regards to Philippine real estate is possible construction stops. Lack of microeconomic data for real estate is another roadblock, let's say. We are still recovering from both the short-term influence of the POGO ban and the longer-term consequences of the coronavirus. And we don't have any leveraging options for foreign investors. Or even if we do have them, they're not favorable to foreign investors. And one of the final really painful nails in the coffin is that as of now, for foreign investors or foreign owners, registration of their ownership can take anywhere from upwards of a year to a couple of years. Did I get all that right?
Oh yeah.
Great. I'm glad I was able to catch all that. Okay. I think that's already a wonderfully extensive coverage on both pros and cons for Philippine real estate. Iemura-san, thank you very much for joining us. It's been a pleasure having you on the podcast. So, guys, if you want to revisit this episode or see more episodes with Iemura-san or our property management head, Mr. Ian Cipriano, on a variety of different topics, you can follow our socials at GSR Philippines. This podcast and other succeeding episodes and previous episodes are also available on Spotify, Apple Podcasts, and YouTube Music. Please feel free to visit our website, which contains a link tree. It's at www.gsr-ph.com. That's www.gsr-ph.com. Also, if you want to gain even more nuggets of wisdom crystallized by Iemura-san himself, he has a book that is launching in English called Investing in the Philippines version 2, which is a revised edition of Investing in the Philippines that Iemura-san previously wrote. And I guess that's all from me. I've been your host, Mr. Jose Angelo Zulueta, and thanks again so much for joining the GSR podcast. Till next time, guys. Bye.
Thank you. Bye.